4 wealth secrets billionaires use that most entrepreneurs ignore. When people think about billionaires, they often imagine luxury, private jets, or global fame. But the real story of billionaire wealth is rarely about lifestyle. It is about structure. Behind every billion-dollar fortune lies a framework built on equity, ownership, capital structures, and a disciplined strategic mindset. Understanding these principles is essential for entrepreneurs who want to build enduring businesses rather than short-term success. Because billionaires rarely become wealthy simply by earning income. They build wealth by owning systems that generate value at scale. Equity. The first and perhaps most important principle behind billionaire wealth is equity. Equity represents ownership in a company. When entrepreneurs create a business, they initially own 100% of that company. As the company grows, they may raise capital from investors or sell shares in public markets. But even after these changes, founders often retain meaningful ownership stakes. This equity becomes the foundation of their wealth. Consider the case of Jeff Bezos, founder of Amazon. Rather than relying on salary or dividends, Bezos accumulated wealth through his ownership stake in Amazon, as the company expanded into one of the largest global commerce platforms. The same pattern appears in the story of Bill Gates, whose early equity in Microsoft became extraordinarily valuable as personal computing spread across the world. For entrepreneurs, the lesson is clear. Income pays bills, but equity builds generational wealth. Ownership. Closely related to equity is the concept of control through ownership. Modern billionaire founders often structure their companies in ways that allow them to retain influence even after going public. One common approach is the use of dual-class share structures. These structures give founders shares with greater voting power than ordinary investors. This means a founder may own a minority of total shares but still maintain control over strategic decisions. For example, founders such as Larry Page helped design ownership structures at Alphabet Inc. that preserved long-term strategic control. Why does this matter? Because building a transformative company often requires long-term thinking. Public markets frequently reward short-term profits. But visionary founders often prioritize investments that may take years or decades to fully mature. Ownership structures allow entrepreneurs to protect that vision. Capital structures. Another key element of billionaire wealth creation lies in capital structure. Capital structure refers to how a company finances its operations and growth. This includes a combination of equity investment, debt financing, and public capital markets. In the early stages of a company, founders typically rely on personal savings, angel investors, or venture capital. As companies grow, they may raise additional funds through institutional investors. Eventually, some companies reach the stage of an initial public offering, or IPO. An IPO allows the company to raise capital from global investors, while giving early shareholders the opportunity to realize significant value. This transition is often the moment when entrepreneurial wealth becomes visible. But the real story begins much earlier. Before an IPO, entrepreneurs must carefully design capital structures that support growth without sacrificing too much ownership. The balance between raising capital and retaining control is one of the most important strategic decisions founders make. Strategic mindset. While equity, ownership, and capital structures form the financial foundation of billionaire wealth, the true differentiator is strategic mindset. Successful entrepreneurs tend to approach business with a long-term perspective. They focus on building platforms rather than isolated products. They think in terms of ecosystems rather than individual transactions. Many billionaires also practice first principles thinking, breaking complex challenges down into fundamental truths before designing innovative solutions. This mindset allows them to identify opportunities that others may overlook. It also enables them to make bold decisions during periods of uncertainty. In many cases, billionaire founders are willing to sacrifice short-term profits to achieve long-term dominance. They invest heavily in research, technology, and infrastructure that can reshape entire industries. For entrepreneurs, this mindset requires patience. Building meaningful wealth is rarely the result of quick wins. It is the result of sustained vision, disciplined execution, and the ability to think beyond immediate results. Closing reflection. When we examine how billionaires build wealth, a clear pattern emerges. Their fortunes are not built primarily through salary or speculation. They are built through equity ownership in scalable companies, supported by carefully designed capital structures and guided by long-term strategic thinking. For entrepreneurs, these lessons are powerful. Focus on building real value. Protect ownership where possible. Design financial structures that support growth. And cultivate a mindset that prioritizes long-term impact over short-term gain. Because the most significant fortunes in the modern economy are rarely created overnight. They are built patiently, strategically, and often quietly, through the disciplined pursuit of ownership and innovation.